All right, bro. Before you even get into that, how many trades did you take about in total in this range?
One, 6, 7, 8.
All right.
Wait, more. Oh my god. Way more.
It's probably a
Way
dozen.
more.
Let's just say a dozen. All right. And
Yeah.
of these about dozen, maybe more, of these dozen trades, how many of them were intentional and something you could actually say was backed behind some sort of bias or behind some sort
Um,
of setup?
say 2, but then I like maybe became greedy. But the first one was this. So regular break and retest, New York session. I'll mark out 7 a.m. with a 15 minute, and I'll wait for a break and a retest. So I waited for a break. Uh, Over here, like with volume and everything, I had like I guess you don't see it, but I'm getting greedy. So my setup in the morning is 1. It's break and retest. But everything I'm seeing, I'm taking. Like I saw here, we're getting a long. I saw volume, whatever. I took a long. And then I saw here that we were going to short. I saw a bunch of fair value gaps. I shorted. But anyways, pretty sure, yeah, this is pre-market. Market opened and I wanted to long just because we had a break in retest. You see that? I mean,
Yeah.
that's a pretty good break. I mean, we went from the break is 30,182
Yep.
to like that's a pretty good break, honestly. 265, but I guess just price action was weird because what do you mean we do this and like look at this big ass candle? You know, but I still took it. We broke, retested, waited a little bit over here. Whenever market opened, we had this big spike, so I was like, "Yup, we're about to long," just because market was pretty bullish. You know, Asia. Just I felt like we're about to start longing from now.
Right. Okay.
Looking
All
through
right.
market is
So,
pretty bullish.
strategy aside and setup aside, I want you to recognize the setup you're talking about gives you about 1 to 2 opportunities. How many entries you took was 6 times of that, probably.
Oh yeah,
You just showed
yeah.
your execution. What do you think that means for you when you take that many executions? What does that result in?
I feel like I'm just greedy. Like I'm just aiming for a win. Like I couldn't take a little red day because like even if I mean technically I was in the green whenever I longed here and I closed, I was up 450. But over here I kind of like fucked up. And then
Right.
you know
Yeah.
what's funny is I caught on this trend. You know I saw all of this and there's no way you wouldn't short over here. Like look at this. I shorted here and I was up like 1200 for the day.
Yeah.
And I was like, fuck it, even more. Like I want to hit 1500. And then I started like losing over here, started fucking up. But the first trade over here fucked me up. So we had break, we retested. I was like, okay, we're definitely gonna long for open. I put an order here, and I lost immediately. Boom, $500. And
Right. I hear you.
like I
So
couldn't take that.
yeah. So at some
I
point
got
in the
like
day, correct me if I'm wrong, but you were up $1,200 in a day. But at the end of the day, you're down some like $900 in drawdown. Was that correct?
yep, 1,000.
So in other words, as a result of what happened, you were down to 1,200 and then 1,000 beyond that, which pushed you. And if the 1,200 was closed for the day, or if this was intraday, this is end of day drawdown. But if this was intraday
Yeah,
drawdown, then
got breached.
yeah, yeah. So what is it kind of based on clearly what you're seeing? What does over trading kind of result in?
It's resulting in bad, and I know it's bad. Do you remember
Right.
on Instagram when we talked about it? I was like, you know, this and that. Like, I
Yeah.
remember if you go here, we go to Instagram.
No, you chill, bro.
I even
Yeah. Don't worry. I
I
know what
talked to you.
I know what you mean.
You remember?
Yeah.
Yeah, I was like, talking to you about it, telling you like, you know, about psychology and how you shouldn't overtrade and everything, but then I found myself starting to do it. I don't know why, but I started doing it. On paper, I wouldn't care. I guess like maybe because the fact that I knew it wasn't real money, and I get eval isn't real money, but it's a step to getting a real money, you know.
Right.
And I mean, it is. It's technically $70.
It is, yes. So it's
So
different than paper, yeah. But what I want you to recognize and realize is what are you actually doing on the chart when you're over trading versus when you're taking on paper? Literally, what is the difference between eval and with paper when you're executing on the
no,
same charts?
nothing at all.
Yeah, nothing at all. So, do you think that over trading is something that fits a profitable model or not?
No,
And
not at all.
right. So now that you know that over trading cannot result in profitability, and you've seen it yourself, even though you're up 1,200 on a day, it still ended up becoming down 1,200 and then 1,000 after that, putting you in the red, right? And how does that,
Yeah,
yeah, and how does that kind of make your feelings like, how does that impact your psychology,
it hurts. 'Cause,
right?
like I know. Yeah. Like, see, this is a day where I actually followed my rules, break and retest, took a trade, cashed out 1,200. This is also a day I followed my rules, took a small loss, called it a day. This is a trade. I followed my rules,
All
and
right,
I
bro.
cashed
I
out
want you to
1,200.
realize something here. So you notice how
Yeah,
you said it hurts, right? Because you were like
yeah,
doing all that good, and then all of a sudden now it brought you down, and that's unnecessary.
exactly. Thank you.
What makes you say it hurts? Is it that it hurts because you're down, or is it that it hurts because you didn't follow your strategy? What would you say is that makes it hurts?
I would say it hurts me knowing that I did something that I literally said you shouldn't do. Like I told you, Alex, don't do that, and I did it, and I was like, what the hell? Why am I doing this? And like I kept doing it. Like in the moment, I was like, I don't know what I was chasing. It felt like the devil started riding me for a second,
Yeah,
and it also hurt that I went from like almost passing my eval to basically restarting.
yeah, that's right. So what I want you to realize, Kareem, is that this whole psychology shit that they're just telling you a lie. What's happening is when you trade not your rules and overtrade all that, just think
Yeah.
of it like whatever, bro. The reason why I say this is because as human beings, we have animalistic sides of us as well as rational ones. The animalistic side is what causes shit like this, and everyone has it, even the best trader. But what I want you to realize is as long as you see that this is not a profitable model, put it so that you know how you said it hurts because you were almost close to passing the eval, but also another reason is it hurts because you were contradicting yourself.
Yeah.
The reason it hurts has to be solely because you were contradicting your model and your plan. That's what
Mm,
that's what your psychology focus should be. It doesn't matter if you're winning or losing money because that's like where we put our comfort zone to like getting a payout or like getting money. The comfort zone needs to be tied to how closely you followed your rules. If you took a green day and you followed your rules, that should be comfortable. If you took a red day and you followed your rules, that should be comfortable. If you took a green day and you didn't follow your rules and you got the green day over trading or taking something you couldn't justify in probably 3 paragraphs why this trade was good, unless your strategy is a lot simpler than that, just justify it all, that green day should still be uncomfortable because you didn't follow your rules. And if you took a red day based on not following your rules, well, that's basically what happened here. Then it makes you feel like shit, right? As you kind of
yeah.
say here. So instead of feeling like shit and going like, oh my God, I just contradicted myself, recognize that this is something defaulted in us as human beings. So forgive yourself about that, but go forward, trade your strategy and start feeling comfortable with how you're executing your strategy. And then
Yeah.
who cares about the outcome? Like this happened right now, right? Is that going to stop you from becoming a trader?
No.
No. And is that going to cause you to continue over trading? Like
No.
who knows, right? But is continuing to over trade something that you want for yourself?
Nope. Not at
Right.
all.
And why is that?
Because I saw the outcome.
Right. And what's the difference between the outcome after over trading and perhaps had you not?
Whenever I overtrade, I'd lose more than I win, honestly. Like, because I used to do it sometimes, and I would catch a small win, but it's not worth it. And
Right.
whenever I followed my rules, like I showed you, this is a day where I followed my rules, a day where I followed my rules, a day where I followed my rules. Yeah.
Right. So you see it for yourself. And what I want you to
Yeah.
recognize for this specific day is, remember when you were up 1200? What did you say to me just now? You wanted to hit 1500, and then it went down from there. So what I want you to recognize is, don't go thinking I want to go hit 1500, because I mean, you had it yourself. What happened when you wanted to hit 1500? Not only did you not hit 1500, you gave back all the profit to the market and then ended the day giving more equity to the market, so ending in a loss, right? So do you see here that chasing after a goal and chasing after outcome is causing us to fuck up?
Yep.
But instead, had you been looking for your setup, had you saw another opening range breakout, which probably isn't permissible anymore at the state of the market, you would have went like, wait, I don't see anything that makes sense to me right now. I'm gonna fuck right off, and my 1200 on the day isn't 1500, but it is 1200 on the day, right? So that's how you gotta think about this thing and orient your mindset. So all your takeaway from this is, number one, if you're trying to be an actual trader, recognize what it means to be a trader. But number two, you're a human being, so forgive yourself about doing shit like this. It's a canon event for all profitable traders to do some bullshit where they place like 50 orders. I've done it myself, so I know what it's like. So now that you recognize, as a trader, this doesn't make sense, but as a human being, that's something we need to do, then what do we do to combat this? Stop attaching yourself to the outcome, and instead of seeking, oh, I need to hit 1500, because that's like how you max it out for the day, unless that is your trading plan, that accounts for your risk for the days. It's like, okay, you risk more for this trade, but you can't afford to do that because you can only get like 2 to 4 evals a month, as far as I remember, right? So whatever your trading plan makes sense, only when you see something that makes sense for you, you enter that shit. If it loses and you entered it and it made sense for you, and in hindsight it still made sense to you, then that's something you should be comfortable with. Have you ever had that happen where you lost and it made sense to you, and even in hindsight you could say the same?
Like that day, I was like, yep, that's fine.
Yeah, okay, so there you go. So keep exercising. This is a condition that makes sense for me. Because if you enter a trade and it won, how do you think that would make you feel? And how do you think that would make your mind to think going forward? You won a trade, you won 1200, but you took some shit that didn't make sense to you.
Yeah, it probably made me feel like, oh shit, like I shouldn't do that anymore.
No, actually, before you feel that way, that's only when you realize. Before you feel that way, you're gonna feel like, holy fuck, I just did. Your subconscious mind is gonna go like, holy fuck, I did something that didn't make sense for me, and I still profited off of it. Oh, maybe this means I can just do some bullshit on the chart and continue to profit off of it. But then what happens? The market rebalances that, because that's not your edge. Your alpha and your statistical edge is shat on. So you kind of eat into your win rate that way. That's not. So what I'm trying to say to you is, whenever you do something that doesn't make sense to your trading setup and you profit off of it, that will hurt you ironically more than had you took a loss. You kind of see it?
Yeah.
Because remember, what happened after you took your 1200? You were convinced that you could hit your 1500. And you're up so much before you brought it to a loss. So be scared to do stuff that doesn't make sense for you. If you see stuff that makes sense for you, enter that shit. And I really like how you typically hold to a profit target or whatever you define, and don't touch that shit. Keep doing that. Keep training your mind, because discipline is a muscle. Like, you can think of it like a bank account or like a muscle. You deposit to your disciplined bank account, and it grows more and more, and you're more disciplined. But the moment you start withdrawing from it, you withdraw so much more than you deposit. So keep training the muscle in you that goes like, I enter what I understand, I don't touch that shit, and I'm happy if I didn't touch that shit and it took a loss, and maybe I did something wrong, at least I entered based on what I understood and I can journal it. But that means I'm not encouraging myself to take a win based on something I don't understand, because then I'll be doing that more often and then won't be winning. All right, that kind of makes sense? Yeah. So what are your takeaways from this?
Definitely not over trading anymore.
Yeah, no, that's the actual, but like in terms of how to think and how to orient your mindset, what's your mindset takeaways of how to think? Let's run through the yeah. Let's run through the decision tree. What's your mindset in how to think? I'm gonna give you the scenarios right now, and you can answer me in how you want to think about this situation as a profitable trader. You see your setup. That's situation one. You don't see your setup, and you're up. That's situation two. And you entered a trade that was bullshit. That's situation three. Answer situation one. You see your setup. How do you think?
If I see myself, I would take it. 'Cause I'm
Yeah,
confident
there you
enough.
go. You don't see your setup. How do you think?
My brain kind of shuts down.
All right, you don't. I'm asking you consciously right now. This is a conscious decision. You're gonna answer for yourself right now. You don't see your setup. What's the logical answer that you want yourself to conform to, going forward?
Don't trade.
Yeah, don't trade. So then,
Yeah.
what's the point of staying on the market at that point? Are you looking for your setup? Perhaps. All right.
Yeah.
Now you don't see your setup, but you're up money. What do?
I'll leave.
Yeah, you get to fuck off. What if you see your setup and you're down money? What do you?
Would I take it?
Yeah.
I take it.
Yeah, take it. You see your setup, you just take it. It don't matter where you're at, as long as it follows your rules and your risk is correct. Like if you can afford to take it, because I mean you kind of have to take it if you see your setup, unless it's like you can fade it for some whatever reason. But you see your setup, you take it. You don't see your setup, you fade it. What happens if you took a bullshit entry and it wasn't your setup, but you didn't realize it until you took it? What do?
Get out of it.
No, you eat that fucking loss.
Yeah.
You eat that loss. What do you think that does for you by eating that loss? I'll tell you two things it does for you. Number one is it locks your decision into the trade. Now, obviously, if you're trading live and you're like actually trading professionally and trading billions and billions of dollars, then you have to risk manage as needed. But as beginner traders and getting into this with the future space and only trading like $50,000 account sizes, you need to train the brain to exercise. If you entered a trade, even if you had a bullshit entry, you stay in that shit and you let yourself eat the loss, or for whatever lucky reason it hits the win. You realize, you tell yourself while you're in the trade, this is a bullshit ass trade. Whatever happens. If it loses, I know exactly why right now, and that's why I shouldn't take this going forward. Otherwise, you're getting away with it. You can't let yourself get away with it. You better eat that fucking loss and never take a trade like that again. Because what happens is you enter a trade. This should be all based on your entry, unless you see like a confirmation against you. Like for example, you take a 100-point trade for some reason, and you see an inverse fair value gap on a 5-minute against you. Then you can exit the trade. But unless there's reason, for example, unless there's like a break of structure against your direction or an inverse fair value gap on a 5-minute time frame against your direction, unless there's a signal that tells you you should exit a trade because it's bearish and when you're in the long or whatever, stay in that trade even if it's bullshit, and then never take a bullshit trade again. Because there's 2 degrees we're training ourselves in. Number 1, we only trade when it's something we understand. But number 2, in the event we trade on something we don't understand, we need to stay in that shit and let us eat the loss. Or if we eat the win, we tell ourselves this is a win, but I totally don't deserve this. I don't care. I'm not going to get happy over this. I'm going to journal how I did some bullshit. The outcome doesn't matter because I didn't follow my shit, and you just proceed forward tomorrow. Because what do you think happens if, sure, we only trade when we see it, what do we understand, and we avoid it when we don't see what we understand? What do you think happens if that's the case, but we happen to accidentally enter something we don't understand and we don't let ourselves hold it through? What do you think then happens to the mind?
It fucks it up.
That's right. What happens then is if you enter a trade that you didn't understand and you realize midway through and you don't let yourself hold it to get to stop loss, then you start exiting it and then you start entering another trade trying to correct yourself, and the human mind wants to be correct and correct itself all the time. That's a universal truth about us human beings. And then you enter another trade after realizing the other one's wrong, and you start correcting yourself, and then you're inconsistent in correcting yourself, and then you start entering and exiting earlier, like, fuck, why did I exit early? I should be in this trade. So you enter again, and then you go like, wait, why did I enter that? You see what I mean? Does that kind of sound familiar?
What's been happening?
So what you need to do to avoid this happening is to handle the case where you took an entry almost by accident, or you took an entry on something that didn't make sense to you. Then you eat that fucking loss. You let yourself lose. Does that make sense, Kareem?
Yeah. I deserve to if I enter something that doesn't make sense to me.
Exactly. And what happens if it happened to win?
Then
you get the fuck off the chart. You get the fuck off the chart because you just started to do something that didn't make sense to you. If there's a setup right after, you as a trader don't deserve to take the next setup's win because you just did something that was bullshit when you could have waited for the setup, right? And let's think about this. Think about the first trade that you took in this trend. Okay, that didn't make sense to you. What would have happened had you just held the trade? Maybe you weren't even up 1200 yet. Maybe you were just up like a few hundred. What would have happened to the account if you just let the trade hit stop loss or take profit and recognize you just did something that was bullshit and you got off? What would your account balance be at?
Like, even still more than this.
There you go. So what you got to do is every time you enter a trade, recognizing it's bullshit in the trade, tell yourself, too late. I entered the trade. If it loses, I deserve to lose. I'm telling myself that right now before it loses. If it doesn't lose, okay, cool. If it loses, too bad, so sad. That's what I did wrong. Because if I let myself exit this right now, that's telling myself it's okay to exit a trade. It's okay to take a shit that I don't understand because I can always exit it. That's not okay, bro. Make sense?
Yes, sir.
All right. So let's get it going forward. Doesn't matter. It doesn't matter what happens to this account. You blow it, doesn't matter. You pass it, it doesn't matter. Well, all that matters is that going forward, you enter stuff you understand, and in the event that you entered something you didn't understand, you punish yourself by holding the trade until it hits stop loss or take profit still. Yeah.
I want to run some things with you real quick.
Yeah, let's do it. Yeah, what's up?
Just me once.
Okay.
So, I think I need help with my entries on break and retest. But
Okay.
I want to run this real quick with you. Only go to replay. Let's go back here. Start new. Let's go.
Yeah.
So here, this is me taking a break and retest Kareem. So I'm seeing price is pretty bullish, you know. And so I'm waiting for a break and retest here. I have this over here.
Is that market open, the huge candle?
No, that's before market open.
Okay.
So here, look at how many things we have. We have a 5-minute fair value gap, 15-minute bullish inverse fair value gap. We have a 5-minute inverse fair value gap here, and you know price is going up like crazy, right?
Yeah.
So I'm watching this, me at work, forward, another 15-minute, we retested, right?
Yep.
Would you? I'm having trouble with my entries. Like, let's say this is live. Would you enter right here? Like, would you enter at this candle? And like, set your take profit over here. Set your stop loss like somewhere down here.
Assuming this is a working model. Reason this doesn't work, by the way, is a higher time frame. But like, are you just asking assuming this is like a working day or like a typical situation?
Why?
The reason this doesn't work is because the higher time frame. So like go into 4 hour. Like I know what you're asking, but I just want to get this aside first. Do you see where we're at in the 4 hour? Zoom out vertically. Yeah.
Yeah, we're very bearish.
Go on to daily. What did we just do? We filled a daily gap.
Yeah, daily.
So what makes you have a bullish bias when the daily and the 4 hour are literally getting their rebalance? And what happens whenever you see a fair value gap, even on the 5 minute, even on the 1 minute, when we tap into that and it respects it, how fast does it respect it? Like for example, you see the CE leave a wick behind. How fast does the body get away from it?
Pretty fast.
Pretty fast, right? So in the same way, price is fractal, right? We just tapped into a daily bearish gap. How fast do you think price is gonna respect from it? And what does that mean for the 5 minute time frame?
That we're gonna crash. We're gonna short.
There you go. So that's why this is not permissible for today. You got to look at a higher time frame. All right, but let's just say this was like a proper condition and this was a generic break and retest. Then what I would do.
Yeah, for me, I like to let it sit out for a minute. I don't like entering early, like right here, because RP says I kind of have like my own model like that works for me. So what he does is, let's say it actually filled into a bullish fair value gap. I like to kind of scout this. Like I like to look and see where it's going because it might go down a little bit more. So I forward it. See how it went down?
Yeah.
I personally, Kareem, would enter right here. I would put my TP probably here because this gap is just not normal. You know,
Yeah, it's you can think of it like a rejection block.
Yeah, I probably put it like around here, this area. Put my stop loss probably right here.
Okay.
And obviously like higher quantity, probably like 5, yeah, 4 or 5, probably 4.
Mhm.
And what I do is I take this and say it taps it and we start going up.
Yeah.
That's when I start scaling up my stop loss. Obviously, if I'm up a good amount, like let's say I'm up 200 to 300, my stop loss, and then obviously like candles, you know, this closes.
Yeah.
You know, I'll put my stop loss break even. If we're going up more, like let's say we're 400, I'll probably scale this up to like 250.
Yeah, got you.
Scale it like a little bit more, just knowing that we're bullish, you know. But yeah, this is where I would tip my
Alright.
entry.
Yeah,
And-
can I share an opinion here?
Yes.
Yeah. So I want you to notice a few things, and also I want to kind of talk about how you did this previously when we were trading together in Asia, in VC. But you did move your stop loss a little bit. Now that's not really important, but I do want you to understand that when you move your stop loss, effectively you're moving an invalidation. What does a stop loss represent? It represents an invalidation zone. So I'd like you to clearly define where price shouldn't come back to break even when it kind of achieves this area. For example, if your trade is correct, perhaps after hitting the fair value gap, it should flush through it and not tap it and respect it and come back. Otherwise, I'd be out the trade. Or if we take a swing high while we're in a long, then price should be displacing way past it and shouldn't come anywhere near break even. Therefore, I am allowed to move my stop loss from the previous invalidation originally up to around my entry point because the trade has progressed far enough that I would consider it invalid if it comes back to my entry point at that point. That's what moving the stop loss is. So I'd like you to move your stop loss not based on your profit, but based on where the candlestick has developed. For example, do you see on the 5 minute there's a fair value gap that's bearish?
Yes.
Perhaps you can say, once price has come to the fair value gap, if I am right, it should breach it pretty fast. Or this trade is kind of wrong. Or why would you enter a trade with a bearish fair value gap on top of it anyway, unless you for some reason had a reason for it to displace through fully. So that might be price hits that and you can move your stop loss to break even. Or do you see the swing high that comes after it? A swing high is defined as 3 candlesticks and the middle one is the highest one. Any swing high, you can even choose like the middle one. Like you see the white candlesticks, yeah, like the middle one of that, yeah, that one, that's a swing high. You can make the swing high your break even level, saying if price takes this swing high, if I'm right on this trade, it shouldn't come back to my break even level there. But until that's taken, you don't go break even. It's not based on price, it's based on market structure or whatever makes sense to you. Break even is an invalidation update. That's all that is. Another thing I want you to realize is when you move your stop loss and expand your take profit like that, what do you think that does to your statistics?
It ruins it.
And why?
Why?
Because imagine you had the same chart. It went up 50 points and then it went down 30 points and you got your entry, and then it went up 30 points. Your original take profit was up 25 points. Had you taken profit, that trade would have hit TP. But now you raised your profit target to 40 points, but the trade only went up 25 points. And then you moved your stop loss and you hit break even. So what did you just do to that trade? You turned a winning trade into a break even trade, even though your model was fully there. But you don't have a conviction on what style of trades you want to take. Do you want to take high win rate and low risk reward, like a high probability 90% win rate 1-to-1? Or do you want to take a lower win rate, 50 to 60% win rate, but you hit a 1-to-3? This is something you need to get down in your system. Like RP Profits likes to take 1-to-3 risk reward, risking 5 points on ES for 15 points. He does that consistently. It doesn't matter if the trade only goes up 10 points. He personally doesn't move his stop loss and would eat the loss because he knows statistically speaking, he's more profitable just doing that because it does breach 15 points more so than not. If you're moving your stop loss up like that and your take profit up like that, you're gonna fuck your statistics, bro. So 2 things I want you to do is define what is a good break even level, right? Because moving stop loss, all it means is not, oh, you're securing less money to be lost. Don't think of it ever in that way, which means don't move your stop loss according to how much you're in profit. That's not your money until you realize it. And you realize it only when planned to at a certain level. It just means price has developed to some stage where if I'm right on this trade, it really shouldn't come back to this level, or I'm wrong, because that's a new invalidation. Like we took a swing high. If I'm right on longs, it should displace past it. Otherwise, that swing high was just a manipulation to deliver for lower. That's what that means. And number 2 is define your profit targets clearly. What is your draw on liquidity? Don't make it random unless you just want to like target 15 points and systematically do it like RP. It has to be intentional. There's no moving the TP up higher or trailing. That's all bullshit. Like you can hit a home run if you analyze it from the higher time frame, then you can do it. But because you're always doing this and executing in the 5 minute, if you're executing in a 5 minute, keep it consistent all the time. Yeah. So those are 2 things kind of wanted to say. So to improve your entry model, I don't trade the break and retest. I know how it works and I'll just kind of share how I would have done it. I personally wait on the 1 minute to see a clear rejection wick. Then I take my entry. That's all I do. I would talk to the other Alex in the server.
1 minute? What?
The 1 minute time frame.
What do you do on the 1 minute time frame?
I want my certain level to be respected. For example, I like taking a break and retest on the CE, right? And
yeah,
I want to see on the 1 minute that we're respecting a level and it aligns with some sort of high volume node. Because I use a volume profile. I need some sort of order flow to tell me that price is going to start going. Because otherwise I'm like kind of catching a falling knife without knowing what's going to go happen. I wait for a clear respect on the 1 minute and then I enter long. That's or short or whatever. That's what I do.
So
But
you, Alex, you've entered right here.
no, I have to see. No, you see those wicks down there?
These?
No, the ones at the CE. Later down the line.
These?
Yeah. No. Yeah. Do you see the CE? Right there?
Mm-hmm. What is CE?
The consequent encroachment. It's the middle line.
Okay, yeah.
The dotted line. Do you see the two rejections? The first one? Yeah, the second one?
Yeah.
I would have entered as soon as we got that. Like, we have to see price trying to push past it and really put you. I can't do this entry in hindsight. I have to do it live. What you have to see is price is like going like this, like boom, 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 and it's just like, it's like doing this. You know what I mean?
Yeah.
But for like too long. And then I have to look at the volume footprint. You don't use this. The volume footprint is accumulating in buyers, like buyers. Like, we're bearish, we're trying to push down, but it's like more and more being filled. It's like there's a passive buyer here, and there's some volume profile, and the volume profile is adding. So like the volume profile is like adding more and more. I'm like, okay, we have aggressive buyers here, and then I enter. That's what I'll do. I would never enter here, by the way, because you saw what I showed you on a daily time frame, right? Yeah. So this is not a setup. But if this was a setup, I would have entered on a CE when I saw the 5 minutes respecting it, or the 1 minute's respecting it, or like they both have to respect it ideally, and we're seeing like boom, 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 boom. It's like, okay, I seen like 5 of them. That's enough for me. I see like normally they push down once or twice, but if you see them push down like 5 times and it's like respecting and it's like developing up even, then it's like, okay, sellers are getting cucked, and then I enter market long, and that's it. That's how I enter. That's the best way I can describe it to you. I also suck at break and retest, and I don't trade break and retest. Just
market open and then went boom.
Yeah.
This is what happened here. See it? Sellers were getting cooked, then boom. You had that.
You want to know why we were bearish today?
Why?
Because you trade break and retest. You don't actually trade ICT like the same way I do. Let me give you my narrative. So go into 5 minute time frame. Look at the market open candle. Do you see the wick to the upside?
This one?
Yeah. This is called a Judah swing, or the trader PB, like Patty.
Yeah.
He calls it the Patty swing. What did we do right there? Do you see how it tapped into the 5 minute?
Yeah.
You remember how daily is very bearish, right?
Mm-hmm.
Higher time frame, we're bearish. Now go into the 1 minute and look at the exact same moment.
Yeah.
So we know how it tapped into that fair value gap perfectly, and it just took all that trend line. Do you see the trend line on 1 minute? That trend line buy side, it's like a little bit, but it completely just did a Judah swing, manipulated everyone out, and then displaced below. That was a manipulation on that time frame, and so that's how we know we're dumping. On the daily, it's a bearish fair value gap. On the 4 hour, it's a bearish fair value gap. On the 1 hour, it's probably something. I mean, you can check for yourself. On the 5 minute, we did a Judah swing to the upside. We delivered from a 5 minute bearish fair value gap after taking buy side, and look at the draws on liquidity for sell side. Just go into 30 minute. Now take a look at the draws that were taken. I want you to understand exactly. Do you see that fucking AI generated liquidity from Asia session?
Yeah, generated.
Yeah. Do you see how strong that trend line draw is?
Yeah.
Do you see that huge like Drake candle that wasn't rebalanced? If we don't displace through it, like, yeah, this one. If we don't displace through it, at least we're going to try to rebalance it, right?
Yeah.
So even without that, like Asia trend line is already enough for a sell side draw. Most people didn't target 300 points. We just took our like 1 to 3 or 1 to 1 for like 30 to 80 points and got off. That's it, right? I want you to understand why we were bearish. Daily was bearish, 4 hours bearish, 1 hour probably looks bearish, 5 minute did a Judah swing, delivered from a 5 minute gap, targeted AI generated liquidity in Asia session for sell side. Unbalanced daily, unbalanced, I don't even know how to describe that candle, right? That's why we're bearish. So there's a narrative on that. But I would say the main takeaway for you, Kareem, is just understand that your stop loss movement has to be based on market structure, and your take profit, moving that shit will fuck your statistics.
Yeah.
And what happens when you fuck your statistics? What would you say?
Yep.
When you fuck your statistics, you go from trading to gambling.
Yeah.
Do you see that? Why? Because you're relying on luck now. You don't know your edge. You don't know if your win rate is 60% or 50% or 40% or 70% anymore, because you moved your TP up, and maybe a bunch of trades you were meant to win ends up not winning now, and now your 70% win rate drops to 40% because you're still going to eat the same losses, right? Right. All right, so you know what to do. Now, with the opening range breakout, I would discuss it with that HIFC guy. He's the one who trades orb. He's an orb master.
Orb master?
He is orb master. So talk with him.
Funny meme.
Yeah, talk with him about it. But yeah, hope you got some value out of this, bro.
Yeah, I did. Thank you.
Yeah.
Yeah. I have to stick to my rules, dude. If I don't, this is never gonna work.
Yeah. No, what I want you to understand is people will not stick to the rules because it's a human thing. I've not stuck to my rules at times. You haven't stuck to your rules lately. Instead of thinking I have to stick to my rules, because that's not going to help. You're going to say I have to stick to my rules, but what happens if you don't again? You contradict yourself and you make yourself feel like shit, right? That's not going to help. Don't think I have to stick to my rules. Let's be specific. I have to enter a trade. Repeat after me. I have to enter a trade if I only if I understand it.
Yeah, I have to enter a trade only if I understand it.
And if I entered a trade and realized it was bullshit, I'm holding that shit anyway. Yeah. Right? Yeah, say that to yourself. If you enter something and it doesn't make sense, you're going to hold it no matter what happens. Say that to yourself.
If I do something that's bullshit, I have to hold it no matter what happens.
And then next time I know not to take something like that. Right?
Yeah. So, right here, real quick.
Yeah.
If you look at this, for example, we just tapped into it.
Yeah.
Would you, like... see how this is gonna play.
Your screen share's frozen.
Is it?
Yeah.
My... oh,
Yeah.
You see it?
I do. Yeah, like you can see who knows if this is bullish or bearish, but you can see how quick the rejection from the fair value gap is, right?
And then we also have over here, we tapped into a 4-hour fair value gap.
Yeah.
So this trade should hit.
You're missing the context. You haven't looked at the draws on liquidity. What is causing price to even go up? Is it purely to rebalance the range, or because we took some sort of draw on liquidity on the sell side? You have to check that too.
Okay.
So what draws did we take? Look to the left. Draw horizontal line where price tapped off from.
Draw horizontal line where?
Where the bottom wick of the white candle was at the bottom. Yeah.
This one?
Yeah. Make it horizontal all the way. Not a ray. Horizontal line. Alt H.
Yeah.
No, click escape. That's vertical, by the way.
Oh shit.
Yeah. Do a line, not a ray. So one that extends both sides. Yeah.
In full line?
No, a horizontal line.
Line. Oh, horizontal line.
Yeah. Yeah, you're good. Alright. Yeah. Put it aligned with the wick. Alright. Now look to the left where there's price. All the way to the left. Alright. Zoom in on those black candles. Hold control.
The ones over here?
Yeah, hold control and zoom in. Hold control so it snaps. Yeah, to your cursor. Alright. What does white, black, and white candle mean here? What do you think it means?
What does it mean?
This is some sort of demand zone, or you can call it order block. Some people call it order block. Some people call it demand zone. Why? It's because it's a bearish candle before a bullish move, and if you brought yourself into a lower time frame, this was an area where orders were previously filled. And also, you can see below it is a swing low, where do you see just there, right? Like No, on the 1 minute. Do you see a 1 minute bullish fair value gap that was respected?
This one?
Nope. Below.
Oh, this one.
Nope. Where you mark, where the same candles we're looking at. Go back to the black candle. The same candle. No. Back to where your line corresponds to.
Like all the way over there?
No. Keep it here. Look at the black candle. Zoom in, hold control. Yeah. Do you see the black candle? Not that one. It's the same one we're talking about. It's white, black, white.
White, black, white. I don't see it.
Go right a few candlesticks. More until it turns black. No, you skipped it. No, you skipped it. Yeah, there you go. White, black, white. Where does that black candle's bottom wick correspond to? It just tapped into a 1 minute bullish fair value gap. Do you see that?
Yeah.
And it respected it. So the way to interpret this is an order block, and just below the order block was a 1 minute bullish gap that was respected. The respect left behind the swing low. Do you see that swing low?
Yeah.
Therefore, price can use this as an opportunity to push up higher for whatever it needs to do currently before taking out that swing low if we're actually bearish and going further. So now go back to the present.
Yeah.
And okay, you see how this shit didn't hit and it would have hit stop loss?
Yeah.
Now do you understand that we delivered from an order block that protected a swing low that respected a previous bullish fair value gap?
Yeah.
There's your context. So why does this trade not work? Because we literally delivered from a bullish confluence from the previous draw on liquidity. And okay, now look, do you see those stacked highs? Do you see, like, go back? Yeah, up, more. Right here. You see there's like triple relative equal highs?
Those?
Yeah, these ones, exactly. Draw a horizontal line above it. Alt H on your keyboard. Right above it. Alt H. Oh shit. Click on the chart first, focus, and then Alt H. Oh, it doesn't work? Okay, sure. Oh, here's a tip. Instead of doing all that, put your cursor where the... try this. Put your cursor on the chart, click on the chart, focus it, and you see the plus button on the price level?
The plus button.
So move your cursor up to the same Y level. Move your cursor up to the same Y level as those triple equal highs.
Split?
No, higher. Go higher. Yeah, same Y level. Yeah, same Y level. Click the plus button, click horizontal line. Bottom. There you go. Perfect. Now align it up higher. There you go. So there you go. Here's our context. We just delivered from an order block. Now go into 5 minute time frame. We delivered from an order block. Here's a high volume node. It doesn't necessarily need to go for those triple equal highs, but we left buy side behind. We're currently in a rejection block. Do you see the wick to the left?
Yeah.
This is a rejection block because it respected a 5 minute bearish gap aligned with a high volume node. So if we break the rejection block, maybe we'll go for the buy side for the triple relative equal highs. That's sweet buy side liquidity. If we don't break the rejection block, then do you see how this is equilibrium in the range?
Mm-hmm.
Then we're at least rebalancing the equilibrium. So now go into 1 minute. So now to answer your question, would this hit? Do you see why it wouldn't?
Yeah.
Because you're entering short when we just delivered from a bullish order block so that we can potentially take buy side and or at least rebalance equilibrium. Now you can consider entering short if you see an inverse fair value gap because we just rebalance equilibrium or because we just took a buy side. That's how you have to always consider it. What are we delivering from? It's not like you just see a fair value gap and you just take it because there's way too many.
Yeah.
Yeah. Make sense?
Yes, sir.
All right, bro. I need to get back to my other call, but hey, as long as I gave you some value and I can help with the execution going forward, whether it's like mental or whatever you're doing, I'm glad my job's done if that's the case.
Thanks so much, bro. I really appreciate it.
Yeah, bro. I mean, you putting in the work, bro. I don't just put some time in for anybody. Like you're always putting in the work. You're working harder than most people. So like.
Dude, I'm literally living in front of the charts.
Yeah. So.
Like. I mean, you see me the other day, we were on call for like almost 6 hours.
Yeah.
Me, you, Tim.
Yeah, that's right. So yeah, let's get it. If I can support you in that way, then, and you got value out of it, then my job's done here.
Thank you so much, bro.
Yep, you got it. All right, cheers, bro.
Right.
Talk to the other guy, the HIFC, the Alex guy. He trades orb. Yeah.
Mm-hmm.
And you can also talk to him about the takeaways of this call as well, if you'd like.
All right.
All right.
Thank you so much.
Yeah, got it. See you.